Yo, what's the dealio, man? Listen, you already know I got a banger for you, all right? So listen, this video could be a game changer for you for your trading, right? In this video, what I want to talk about is I want to talk about the best times to enter into trades, right? So let me break this down for you guys first. There is a misconception that you need to be taking trades all day, right? First 10 minutes of the market, right? You take trades. That's not always true. So let me tell you how I do it. That first 30 minutes, I'm looking for a quick little, you know what I'm saying? Quick little something. Maybe I could get 10, 15, 20% real quick, cool, right? But then I have a basically a philosophy over time that what I've been seeing a pattern, right? And so when we're talking about day trading and getting bigger returns, right, and not having to stress about that trade, it's going to come from the bigger time frames, right? So we're going to talk about that today. If you're just watching, be sure to subscribe to this channel and like this video, all right? So the best three times or the best times to get into trades throughout the day. So the first time, right? The first time to get into trades, the best time is going to be, I'm on the West Coast, right? So I'm going to say everything in West Coast time. So the first time I love entering into trades is literally at 7 a.m. West Coast time, right? Pacific. Now, why is it 7? A new 1 hour candle opens, a new 2 hour candle opens, and a new 6 hour candle opens, right? I pay attention to the larger time frames because that lets me know the direction of the stock, right? Obviously, it ain't gonna be 100% accurate, but this gives me an edge, right? So we got 7 a.m. That's 10 a.m. East Coast, right? So the first 30 minutes is like a mad dash, right? Everybody trying to sell, buy, get in, get out, right? All of that stuff. So there's a lot of volatility. Then after that, what we're going to have is either rejections or stabilization, and we're going to have a direction, right? So we could go up, but then after the first 15-minute candle, we could reject. And if you look at the 30-minute and the hourly and the 2 hour, you may see that rejection on a bigger time frame and be like, okay, we're about to trend down for the next hour, right? So at 7 a.m., 10 a.m. Eastern, a new candle opens on the 1 hour, the 30-minute, the 2 hour, and the 6 hour, right? The next time frame, and after this, I'm gonna give you guys examples as well, right? I'm gonna give you all examples on the charts. The next best time frame to enter is on the 4 hour, right? At 9 a.m., right? Pacific time, which would be 12 p.m. Eastern, right? A new 4 hour candle opens at 9 a.m., right? These are going to give you clear levels, clear direction, what's going on, all of that stuff. So in the morning, first 30 minutes, I may get that quick snipe, right? But I'm not going to go heavy into those trades, right? I'm not going to go heavy into those trades. I may go modest, right? Or even a little bit light, right? But on at 9 a.m. or 7 a.m., that's when I'm going to start saying, okay, I'm going to get into this trade and I'm going to let it cook for the next hour to 2 hours, right? And that's where you could literally go print, 50, 60% on a daily time, like on a daily, all because you're using bigger time frames, right? And so for a new 4 hour candle opens at 9 a.m. And like I said, we're going to go to the charts and I'm going to show you guys exactly what these setups look like, all right? The last time, the best time to enter is going to be at 11 a.m., right? And that would be 1 p.m. Pacific, right? Not 1 p.m. Pacific. That would be an hour before close, right? An hour before close, so that would be 2. And why is this? Because a new hourly candle opens every single hour, obviously, but you have a new hourly and then you have a new 2 hour candle as well. Those 2 hour candles are very powerful. Okay, so we got 7 a.m., we got 9 a.m., and we got 11 a.m. On the East Coast, that is 10 a.m., 12 p.m., and then 3 p.m., which is an hour before close. Right at 7, we got a new hourly, a new 2 hour, a new 6 hour. At 9 a.m., we got a new 4 hour time frame, and then at 11 a.m., we have a new 1 hour and 2 hour time frame. Now, don't forget, you also have the hourly time frame every hour at the top of every hour, and then you have the 30-minute time frame at the top of every hour too, right? So really, entering in at the top of every hour is a beautiful thing, right? Now, yes, you can enter within those hours if you're paying attention to the 5 minute and the 15 minute, right? So the bigger time frames help show direction, but the smaller time frames help with the entry, right? Always remember that. Make sure you write that down. Bigger time frames help show the direction and the levels, and then the smaller time frames help with the entry. So you may say, okay, I see the direction at the on the 4 hour time frame, right? But it pulled back. Let me wait for a reversal on the 5 minute time frame, and then that reversal on the 5 minute time frame is going to be my entry for me looking at the hourly or looking at the 2 hour time frame, right? That's how it goes. So now what we're going to do is we're going to go to the charts, and then I'm going to show you guys this like in real time. The market right now is still open. We got a couple more hours left. So let's go to the charts and let's see, okay? So here we go, right? My bad, Joe. All right, so we got the charts right here. All right, so let's go to, it doesn't matter the stock, right? It does not matter the stock. It's all about the time frames. It's about understanding the principles of all of this stuff, right? So right now we're on the hourly, okay? And I always use the strat, right? That's my strategy of preference. I love the strat method. So if we look at the hourly, let's go to the SPY. Let's go to the SPY, okay? So look, let's go to the hourly. All right, so at 7 a.m., a new hourly candle opens up, and look, this candle is a failed to up. It failed to go up, and then look what happened. So this was the first 30 minutes. This is called a bull trap. The first 30 minutes of the market, let's go to the 30-minute real quick. First 30 minutes of the market, we came up right here, and then we rejected, and then we started to come down, right? So if you look at the hourly, look, came up, rejected, and then look what happened, came down right there, okay? So taking this entry off of the hourly, you would have got paid, all right? Off the 2 hour, because you see right here, it opened at 7 a.m. 2 hour candle, same thing, right? This is a 3 bar. It looks like it could have went up, but it did reject right there. It opened up. It didn't even get a chance to go up. It just started to come straight down, right? That's on the 2 hour. And then you look at the 6 hour time frame, and it looks very similar, right? Boom. And then you can see the levels clearly right here on the chart, right? So that's the SPY. So that's at 7 a.m. Let's go to another style. Let's look at Robinhood. Okay. Look at this one on the hourly. Okay. On the hourly, this was at 6 a.m. So this is this right here was pre-market and the first 30 minutes of the market, right? So this is a bearish engulfing right here. And then look what happened at the top of the hour. At 7 a.m., you see that there's selling pressure coming down. Boom, right? At the top of the hour, you could have took that one. Okay, so that is at 7 a.m. Let's go to 9 a.m., right, which is going to be the 4 hour. As you can see right here, this says 5 a.m. and a new candle opens up at 9 a.m. right here, right? So we can see that hood right now on a 4 hour is consolidating because that's a 1 candle, okay? So it closes in an hour and a half. So if you see, let's just say that this candle was about to close on the 4 hour, and then if it would have broke above here, you could have taken that on the 4 hour and just stayed in and rode it to the upside, right? But let's go to see if we could find a setup on the 4 hour. And obviously, like I said, this isn't 100% of the time, but these time frames will help you out. Okay. So we got IW. Let's go to IWM, right? Boom. So this is a 3-1, so it's consolidating right now for this 4 hour period. It's going up and down, and bigger time frames is going to help you see if a stock is in motion or if it's just going up and down and consolidating. If it is consolidating, you don't have to enter into that trade at that time. You could just wait. Okay, and the hardest part about trading is waiting. All right, let's go to Iron. I hit this play earlier this week off of this setup right here. Okay, so look. So right here, right? I hit this one the other day at 5 a.m. I saw a 3-bar right here, which is a bearish engulfing. I took entry right here, right? And then I ended up riding down to around here. And it was because on the 4 hour, it closed right here. It was at all-time highs, basically. And I saw a rejection, so I took entry right here. And then I just stayed patient and I wrote it down. It did come down lower, but if you see, like this right here, this is on the 5 a.m. and then boom, right? You could have got into here and then rode it to the upside, right? From here to here, right? Same thing. This is 1 p.m. So this is the end of the market right here. So if you see a solid candle, like a 3-bar on the 4 hour about to close, then that next candle most likely is going to keep going in that same direction. All right. So that's at 11 a.m., right? That's on the 4 hour time frame. And then we go back to the 1 hour and the 2 hour, right? Previously, like the previous days. And then we got like 11, we got like 9 a.m. We got 1 p.m. So we got right here 11 a.m., right? So you may be able to find some setups on the 2 hour or the 1 hour all off of this time frame right here, right at 11 a.m. because we got 1 more hour until the market closes, and a lot of times the market likes to go in a direction that last hour or the last 30 minutes, and sometimes even the last 15 minutes, right? So 7 a.m., 9 a.m., and 11 a.m. I do like to find setups, and so what you also can do is if you're looking at the 1 hour, let's say, and you see something, let's go to Coinbase, right? Look at this. If you see something like this, right, came all the way down right here, and then we got 2 consolidation candles. It still did go up from 294 to 296, right? But then it came down a little bit to 295, and then it started to push up, right, all the way up here. You could have took entry right here off the hourly and then just chilled, you know what I'm saying, been patient, and then look what happened. Boom. You ride it up, right? We talking, you can make 20, 40, 50% in about, I would say an hour or so. And the thing about the middle of the day or throughout the day, the stock ain't gonna move with as much velocity unless some news comes out or something like that. But it will move in that direction nice and slow and steady. So if it does start to reverse, you will have a little bit of time to get out of that trade because it's not going to hit a level and just reverse super hard, right? Because when you're trading intraday and not that first 45 minutes to an hour, it's a lot more vicious. The reversals and rejections and the breakouts, they're a lot more vicious because the market just opened, right? Everybody's trading in the beginning, but throughout the day, right, it's a lot more steady, and you could just slowly, truck your way into making the amount of money that you want to make, right? So yeah, I like paying attention to 7 a.m., 9 a.m., and also 11 a.m., right? And I like paying attention to the hourly and then the 2 hour time frame. Those are becoming my favorites, right? Because there is a misconception. There's a misconception that you got to pay attention to the 5 minute or the 10-minute time frame, right? You could do whatever works for you, but you're going to start to find your flow, right? You're going to start to say, okay, I like this type of trading style. I don't like this type of trading style. And because of that, you're going to start to see what works for you. Now, as of lately, I've been liking taking a little bit of a more relaxed approach to trading. And I do like just finding a setup off the hourly or the 2 hour time frame and just letting it ride, right? Because that first hour, You can get some quick stuff, but also remember, the shorter the time frame, the more room for error, right? That's another thing. So if you get, let's say it's this week, right? If you get next week's contracts off of the hourly, right, off of the hourly time frame, you almost can't lose. You almost can't lose because you'll have enough time on your contracts. You'll see the direction. So if it does pull back a little bit, you don't have to really worry about it, right? And so this is how you can slowly and methodically grow your account as well. All right, so we just talked about the best times to trade, but also understanding the bigger time frames. The bigger time frames are money. I love the bigger time frames. You don't get faked out as much, right? You can see everything a lot clearer. Okay, so if you're paying attention to the hourly or the 2 hour or the 4 hour, you could just come down to the 15-minute or the 5-minute to focus on your entries, right? You focus on those entries you get in. You could get in light or you could go a little bit heavier, give it some time, and it's going to do what it do. All right. So I hope that helped you guys out. I hope everybody has a great weekend, and I'm going to see you guys on tomorrow's video. All right. Like I always say, make sure you get up out of your head, go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I appreciate y'all time. I'm going to holler at you guys tomorrow. Stay smooth. Peace.